Having to deal with financial issues as you get older can be pretty overwhelming. And so before my grandparents decided to downsize and sell their home, I wanted to see if a reverse mortgage could be a better option for them. So I looked into the specifics to find out what it was all about. Hey everyone, and welcome back to the channel. Today we're going to be getting into the world of reverse mortgages, focusing on what Mutual of Omaha has to offer. And so I'll break down what reverse mortgages are, how they work, who they're best for, and some pros and cons. And hopefully by the end of this video, you'll be able to decide if Mutual of Omaha is the right choice for you for a reverse mortgage. And if at any point you decide to look into Mutual of Omaha, you can use the affiliate link I've left for you guys in the description down below. It won't cost you anything extra, and you might even get a bit of a discount, which you wouldn't get if you went directly to their website. And so without further ado, let's get started. Okay, so let's start with the basics. What exactly is a reverse mortgage? Reverse mortgage is a special type of loan for homeowners who are 62 years old or older, and it basically lets you convert part of the value of your house into cash without having to sell your home or make monthly payments. So instead of you paying the bank every month, the bank pays you, and you can choose to get this money all at once in monthly payments as a line of credit or a mix of these options. And the great thing about this is that you don't have to pay back the loan until you move out. But then again, there are some things to keep in mind, like you still have to pay your property taxes, homeowners insurance, and keep the home in good shape. If you don't, the loan could become due. And the amount that you can borrow depends on a few things like your age, the value of your home, and current interest rates. And usually you can get between 40 and 60% of your home's value, up to a maximum of around $1,150,000 set by the Federal Housing Administration for 2024. Okay, so now that we've covered what a reverse mortgage is, let's talk about Mutual of Omaha. And if you haven't heard of them, Mutual of Omaha is a well-known company that's been around for more than 100 years. It was founded in 1909 and based in Omaha, Nebraska. They've built a strong reputation in the financial services industry, offering a range of products, including Medicare insurance, life insurance, disability insurance, and of course, reverse mortgages. In 2018, they expanded their services by acquiring Synergy One Lending and its subsidiary, Retirement Funding Solutions, which they rebranded as Mutual of Omaha Mortgage in 2020. And they aim to help customers protect what they care about and achieve their financial goals, so every customer can have a financial future that they can picture, plan, and protect. Besides that, Mutual of Omaha is very involved in community service and giving to charity. And in 2005, they set up the Mutual of Omaha Foundation to help break the cycle of poverty. So when you're considering a reverse mortgage with Mutual of Omaha, you're choosing a company that has a long history of trust and community involvement. Now let's get into the types of reverse mortgages that they offer. So Mutual of Omaha offers a few reverse mortgage options to fit different needs and situations. Starting with a home equity conversion mortgage, which is the most popular option that they offer, is a federally backed loan for homeowners aged 62 and older. And you can receive your money in one payment, monthly payments, a line of credit, or a combination of them. And if you choose this option, you won't have to worry about making mortgage payments every month, but you will still have to pay property taxes, insurance, and maintenance costs. Then they have HECM, Reverse for Purchase Mortgage, so if you're looking to buy a new home, this might be your go-to option. Seniors can buy a new primary residence using loan funds from a reverse mortgage. It gives you the freedom to buy a new home without having to make monthly mortgage payments, but you still need to have enough equity in your current home to cover the down payment on the new home. After that, there's Home Safe Reverse Mortgage, which is for those that have high-value homes. This type of reverse mortgage lets you access more home equity than the standard HECM limits, and you can also borrow up to $4 million, making it a great choice for those with higher value properties. It's not FHA insured, but it offers private insurance options and competitive fixed interest rates. And lastly, there's the reverse mortgage refinance, which is for people who already have a reverse mortgage and want to refinance it. And refinancing can be a great option for you if the value of your home has increased, interest rates have dropped, or if you want to switch from an adjustable rate to a fixed rate, as you can use this to get more equity or change the loan terms so they work better to fit your needs. So now each of these types of reverse mortgages has its own pros and cons. The best one for you will really depend on your personal situation and financial goals. And so it's important to understand the different options and talk to a financial advisor to make an informed decision. That being said, let's get into the plans and pricing. Starting up, there's origination fees, which are the fees charged for processing the loan, and they can vary depending on the loan amount, but typically cannot exceed a total of $6,000. Next, there's mortgage insurance premiums, and since most reverse mortgages are backed by the FHA, there is an upfront mortgage insurance premium, which is usually 2% of the home's estimated value. There's also a yearly mortgage insurance premium of 0.5% of the loan balance. Then there's closing costs, and these include estimated fees, title insurance, and other closing costs. These costs can vary, but they typically range from $2,000 to $3,000. After that, there's servicing fees, and lenders might charge monthly servicing fees, which typically charge a maximum of $35 per month. And lastly, there's interest rates, which can be either fixed or variable, but the actual rate you get will depend on the current market rates and the specifics of your loan. So it's important to realize that these fees are usually added to the loan balance, so you don't have to pay them out of pocket. And while reverse mortgages offer many benefits, there are also a couple potential downsides to be aware of. But in my opinion, these are probably not major deal breakers for most. Okay, so first up is accumulating interest, which is that the interest on a reverse mortgage adds up over time. This means that as the interest builds up, the loan amount goes up. But since you don't have to make monthly payments, this might not be a big deal for you if your main goal is to have more cash once you retire. Another thing to consider is that reverse mortgages can have higher fees and costs compared to regular home loans. These fees include origination fees, mortgage insurance premiums, and appraisal fees. These costs are usually added to the loan balance. Personally, I didn't find this to be a big deal because the costs are spread out over time and are part of the benefit of getting extra cash flow without making monthly payments. So when I first started looking into Mutual of Omaha's reverse mortgage options for my grandparents, I felt a bit overwhelmed. But after checking out their resources and talking to their representatives, I got a clear picture of how it all works, and their educational materials helped make everything easy to understand. And what really impressed me was their personalized customer service. The representatives were patient and made sure we understood each step of the process. This support made a huge difference and helped us feel confident in our decision. Another really great thing is the flexibility in how you can receive the funds. So whether you need it in one payment, monthly payments, a line of credit, or a combination of both, Mutual of Omaha offers options that can fit different financial needs. So overall, our experience with Mutual of Omaha has been positive. The process is straightforward, their support is excellent, and the flexibility that they offer makes it easier to find a solution that fits your needs. So if you're considering a reverse mortgage, I'd definitely recommend checking out Mutual of Omaha. Anyway, that's all for today's video. If you found this video helpful or interesting, give it a thumbs up and subscribe to see more videos like this one. And again, if you decide to look into Mutual of Omaha, you can use the affiliate link I've left for you guys in the description down below. It won't cost you anything extra, and you might even get a bit of a discount which you wouldn't get if you went directly to their website. And as always, if you have any questions or comments, don't hesitate to leave them in the comment section down below, and I'll do my best to get back to you as soon as I can. Other than that, thank you so much for watching, and have a great day.